Now let us proceed with your case F. Okay, for case F, take note, this is a domestic corporation over here, and as we are discussing a while ago, for domestic corporation, holding period is not applicable. However, your capital loss is still have the same rule with your capital gains, which is you can deduct your capital loss to the extent of your capital gains. But holding period, no rule for your domestic corporation. For your business income, obviously it is 800. For your business expense, we have 500,000 pesos. There's no compensation income over here because this is a domestic corporation. Obviously, this is not an individual earning a compensation income from an employer, but a corporation which is earning an income from its business operations. Okay, so we have 800 less 500. We have 300,000 pesos for our ordinary income. Next, we go to your capital gains held for 2 months. So sale on bonds, this is 100%, no rule. So automatically, this is 100%. Direct sale to buyer, so this is CGT. We have capital loss and sale of a car held for 2 years, even though, oh my goodness, even though, can I check on it? Okay, this is 2 years. I was confused because the previous one is 10 months. So 2 years, that is 10,000 pesos. For 10,000 pesos, 2 years, we can say that if we have a holding period, this should be 50%, but since this is a corporation, we have no holding period. That means this is 100% loss. Capital loss on sale of land in the Philippines held for 2 years. Obviously, this is CGT. How about capital loss in 2017? Are we obviously gonna use this one over this one, or this one over this one? I think that you should be cleared right at this moment. In our introduction, in the first part, let us see here. Take note of this one. This rule is applicable only to your individual taxpayers. That means that corporation is not entitled for net capital loss carryover deductions, so we are not gonna use this one. So this is eliminated. So 70,000 pesos of gain, we have 70,000 here, less the 100% of 100 of your 10,000 pesos, rather, we have less 10,000, we have 60,000 pesos. So 300 plus 60, so that is 360,000 pesos of your taxable income for the year 2018. Hi, so we are almost done. However, before I end this video, I will first finish the handouts or the coverage of these handouts. So we still have another line topic over there, which is your capital gain subject to your percentage tax. So these are your stocks that are being sold, exchanged, or bartered in your local stock exchange. So if you will sell these shares or the listed shares in the local stock exchange, so you are entitled to pay for a stock transaction tax or your other percentage tax of 6/10 of 1%, or that is your 0.60% of the gross selling price or the gross value in money of the shares of stocks. Okay, so the following are the sellers or transfers of stock that are liable to this tax. Your individual taxpayer, even though you are a citizen or you are an alien, so you are still subject to the stock transaction tax. Next is your corporate taxpayer, whether you are a foreign corporation or a domestic corporation, you're also entitled to this one. And other taxpayers not enumerated from what I've said or in your handouts from A or B. Examples are your estate, trust funds, and pension funds, among others. So you are subject to your 6/10 of 1% of your stock transaction tax. Take note that for this share of stock subject to OPT, it should be a capital asset, not an ordinary one, not the ones that being handled by your dealers in securities, because again, for your dealers in securities, they are subject to basic income tax because they are considered as ordinary asset. Next is that dealers in security also pay for value added tax, additional value added tax. Next is that gross selling price is used, or gross value in money. So if there is gain or loss, we are not up to that anymore because we are up to the gross selling price or the gross value in money. That is our tax base. Next is, of course, who will pay for the tax? The tax will be taken by the stockbroker to the seller, and then he has the responsibility to pay the tax to the BIR or to your authorized bank or to whoever that is authorized to be a collector of the said amount. Okay, so let's proceed to the 3 examples. Read this case, the last case. George sold 2,000 shares of a domestic corporation in a local stock exchange at 110 per share. We have an acquisition cost of 100 pesos. Take note that George sold the shares of a domestic corporation in the local stock exchange. So that means we are going to use other percentage tax or OPT, or our stock transaction tax of 6/10 of 1%, so that is 0.60%. So if you are not if you do not agree, so let's solve it in your calculator. 6/10, that is 0.6 times 0.01, that is a 6 raised to -3. So just use your mathematics over there, then move it. However, we are in percent, so that leads us to 0.60%. I know you know this already, but just to have a clarification in your mind. Okay, so how much is the capital gains tax on the sale of share? Is there any capital gains tax for this transaction? I mean, capital gains tax is only applicable to those shares that you sold directly to buyers. So this is not sold directly to buyers because we have a local stock exchange in the middle of it or bridging it. So this is subject to OPT, not CGT. So this is 0. How much is the income subject to basic or ordinary tax? Is this something that is subject to basic or ordinary tax? I mean, look at this one. This is from the local stock exchange. This is not under a dealer in securities. So 0 again. What is the applicable tax on the transaction? What is the applicable tax for this kind of shares that is sold in a local stock exchange? Yes, correctly, we have your stock transaction tax. Stock transaction tax is an OPT or other percentage tax. That means this is not an income tax. This is a business tax. Assume that George is a dealer in securities. Determine the OPT for the said transaction. Is there any OPT for the said transaction if George is a dealer in security? I think no, because dealers in securities are subject to your basic income tax and not OPT, because the shares being sold by George is a share that is considered as an ordinary asset.